Good morning everybody, and this is your Forex day trade setups for today, and as usual starting off with Euro USD. So yesterday being a public holiday in the US, nothing really materialized. We had to move down and now we're sort of moving back up again. This trend line is still something we need to be paying attention to. You can see it's pretty well formed, fairly good structure as well. So we're in this bullish channel. We have broken through our moving averages, we've got crossovers, and these three levels that I gave you yesterday are still very much in play today. So if we get down to the hour, we were looking for a buying opportunity off one of these levels. We see we got this yesterday, 118.580, really slow and sort of aimless move at the moment. But we have gapped up coming back, so this is the next level that we need to pay attention to, 118.711. If we can get some positive price action off that, so inside bars, engulfing bars, you can see there's an inside bar, there's an engulfing bar, or a pin bar, there's a pin bar off a level. Pretty textbook stuff. So any kind of pullback onto that level, we're looking for another continuation move to the upside. If we start breaking below 118.580, then I think all bets are off, and then we need to start looking for the reversal to the downside. So for me at the moment, that's the view that I have in the hour. The trend is up. We had a bit of a consolidation yesterday due to the public holiday more than anything else. So I would expect pullback onto structure, close this gap, sort of buyers come in off there and then drive it up to the upside. Moving on to US dollar, Japanese yen. For all intents and purposes, this is very much still sideways and on the moving averages. You can see on the 8 hour, oscillators are indicating that we need to be looking for a level. We do have a level here that is 109.693, and we have a pin bar forming off that level. Not finished yet, but that's definitely structure that is forming. So this is contradicting what we're seeing on Euro USD. So this is indicating strong dollar. Euro USD is indicating weak dollar. So there's a sign of caution. What you need to do now is just have a look to see if we do have structure here. On the 8 hour there's not much, but on the 1 hour there's definitely some structure brewing. So you can see we have firstly a higher low that's forming, and we also have an engulfing bar that is forming. Don't like this range bar though. This red bar is a range bar. You can see tail to the upside, tail to the downside, a bit of indecision. We are below the moving averages at the moment. So for all intents and purposes, we should be looking for shorts. But if you look at what's happening on the 8 hour, we should be very cautious and waiting for opportunities to the upside based on the pin bar and the level and the oscillators here. So as far as I'm concerned, 50-50 call, which means I will sit on the sidelines until I see the 1 hour agree with what I'm seeing on the 8 hour. Don't really want to go against either one of them. So that's kind of the view I've got there. So sit and wait and see. British pound, Japanese yen, very much inside a channel as well. We've got a moving average crossover that's happening at the moment. We are defending the 155 at the moment. So the big question here is, and it's been a messy downtrend, as you can see, big moves down, big moves up. So it's been a really messy trend. So at the moment you can see lots of tails on the upside, tails to the downside in between these two levels. I'll give them to you now. But there you can see the structure. So you have 152.221 to the upside, and then you have 151.944 to the downside. This for me is sit on hands. That's sideways, range, danger, keep money in pocket. Oscillators indicating another move to the downside in an upward trend. Not interested in that. So we will sit on the sidelines with British pound, Japanese yen. Moving on to Euro, British pound. So again, reinforcing, we've been on this messy downtrend for so long. It looks like we have got crossovers here. Look at my oscillators. They have drifted off the top. They are now coming to the bottom. Not quite at the bottom, but they are sort of starting to cross over. That is indicating that this downward trend may very well be changing, and it is going to be a messy bit of structure here. Now, the one thing that I want to point out here on 8 hour is there is a massive double bottom here, and it is with diversion. So you can see that's lower than there, whereas price is lower there than it is there. So that is a double bottom. On the Bollinger Band, it would be a W bottom. It could be a sort of almost a head and shoulders, but we're missing a shoulder here. And that targets this previous high up here of around 0.86648. So this is the one pair that I'm very interested in at the moment, because it is just, it's mucking around trying to build a base. And you can see this is a fairly solid base here, and now we're trying to test this level here, 085770. So London breakout strategy for me on this today. So the first 7 bars, put your range in, so measure your top and bottom of the range over the first 7 1-hour bars, and I'm looking for a break to the upside. Break to the downside, I think you'll probably reach your range target, but you're probably going to be held up by this level again of 085657. So for me, that's kind of the strategy. I'm looking firstly for 085945 to be tested again. If we break above that, then I'm definitely looking to hold out for the measured move of 086648. Okay, we are sideways at the moment, but there are so many signals here which are indicating that we should be paying a very close attention to this. You can see in the moving averages as well, moving averages slightly crossing over at the moment on the hour, so there is a lot going on here. Anyway, that's kind of my view at the moment. This is probably the only pair that I'm really paying attention to. The other 3, I think we'll just sit and wait and see what structure forms there. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.